This week, how reverse mortgage professionals can find opportunities even in a bloated and uncertain housing market.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. In today's episode, we're going to examine 3 advantages that reverse mortgage professionals can find even in today's uncertain housing and mortgage market. But first, let's look at the latest developments in the housing sector. With mortgage rates topping 8% for most mortgage applicants that have a typical credit score, potential home buyers today are now finding themselves being forced to the sidelines. In fact, on October 17th, a Redfin article noted that a home buyer today must earn $115,000 a year to afford the typical home at today's median home price. And that's $40,000 more than most American households earn. Now, a confluence of factors, including historic surge in mortgage rates, limited inventory, and increased monetary supply, has propelled the housing market to levels that verge simply on the absurd. Now, although sale prices have eased back in certain markets, most metros across the country are 25 to 40% above their pre-pandemic pricing. Consequently, the average monthly mortgage payment for home buyers today now stands at about $2,900. That's an 89% increase according to Redfin. In contrast, in August 2020, the typical principal and interest payment was about $1,600, when the average mortgage rate was just under 3% and the median home price was $329,000. Now, this all brings us to the importance of examining home prices in terms of real inflation-adjusted dollars. Let me explain for a moment. For example, if you purchased a home in Miami, Florida for $300,000 back in January 2019, the price today would be about $412,000 today, and that's a 37% increase from pre-pandemic pricing. However, when adjusted for inflation, the home's cost should have been about $376,000 in 2019 dollars. Now, that underscores the disconnect between present home prices and economic fundamentals. Consequently, those real estate markets that are overvalued are going to be the most vulnerable to a pricing correction. When? Who knows? But the math can be summed up in just one word: unsustainable. Now, given that scenario, reverse mortgage originators like yourself should be scrutinizing your housing markets in which you're originating to better identify those that are going to be most prone to have a housing bubble or a drop in values, and those markets that are not exhibiting bubble behavior. And that's going to better inform you where you're going to find valuation issues and where you won't, where you're going to find lower appraisals due to lower comps. And that insight will guide you in your expenditure of time and energy and money. Now, one tool that we recommend to help you accomplish that and to track local real estate markets by county or region is SnapForce CRM. I'm going to give you a link below in our description that tells you how you can use that with some examples. So, is there a silver lining for the reverse mortgage lender and professional? Yes, in fact, there is. First, older homeowners are now sitting on a mountain of home equity. But the challenge is wading through those prospects who don't qualify. They don't have enough equity to get a reverse mortgage. And all of you are experiencing that. However, there are still qualified homeowners in your city, county, and state. The second advantage is older homeowners that are seeking to qualify for a HELOC, they may have second thoughts when they compare that equity line's interest rate to their existing mortgage. Now that's an opportunity to compare a home equity line of credit to the adjustable rate HECM, or home equity conversion mortgages, line of credit. In fact, several savvy originators just told me last week they're forming partnerships right now with local banks and credit unions to assist their older clientele that may not qualify for a HELOC, and many don't, or they may find the terms of the loan unacceptable. So rather than having a dissatisfied depositor, that lending institution can provide a bona fide alternative, which encourages that customer to stay with the bank and keep their deposits there. The third opportunity is of those who recently refinanced their mortgage. They're not going to be interested in pulling out equity with a cash out refinance. Why would you do that? The interest rate and the payments are going to be nearly double what they're paying today. But this is where a HECM could not only eliminate the required payments rather than doubling them, that's one advantage, but in some instances, you could provide a line of credit that cannot be frozen if their home value falls. And for those that don't want to roll their entire mortgage balance into a reverse, which we know is a requirement, there is an option of a proprietary loan, such as the Home Safe Second. That can give them the funds needed, much like a cash-out refi for qualified borrowers 55 and older, without the payments. Now, while the housing market is in a very precarious position, significant opportunities do remain. How can reverse mortgage professionals today best position themselves, even in today's challenging housing and mortgage market? Ask yourself, who are you going to partner with so you can have more conversations with potential borrowers? Please share your ideas and your inputs in the comment section below. And speaking of sharing, if you would share this video on LinkedIn, I appreciate each of you who are doing that. And don't forget, we have a YouTube channel where you can subscribe. Hit that notification bell, by the way. That way you never miss an upcoming episode. And each and every week, we bring you the reverse mortgage news in 2 media formats, audio and now on video. That's HECM World Weekly. You can find us on Apple Music, Spotify, Podbean, and on HECM World. And our video format not only is here at HECM World, but here on YouTube as well. Thanks again. Have a great week, and be sure to return next Monday for more reverse mortgage news, commentary, and analysis here at HECM World.